Happy St. Paddy's Day, everyone. It's Brian, the home loan and realty guy. And today I want to talk about the programs that I have to offer. So let's go. All right, everybody. My last video cut off, so I'm just going to redo this one. Cell reception at my property kind of sucks, so I'm going to just stay up at top for this one. So I want to talk about some of the programs that we have to offer besides all the regular programs, right? Besides the FHA, the VA, the conventional, and jumbo. That's all standard stuff. What I really wanted to talk about is the alternative financing programs. A lot of people are not aware of these programs and the benefits that come with them. So this is what I wanted to touch base on because I'm able to help a lot of people. I always get a phone call when I do these videos and it interrupts my video. So just going to kind of click that off there real quick. Okay, so these programs are super important because there's a lot of people that don't fit into the box, right? That conventional box, we have to have a certain credit score, certain debt ratio, right? You got to supply taxes and all this stuff, right? Well, what happens if you're super rich and you write everything off on your taxes, right? How are you supposed to get a loan when you're, like asset rich but income poor based on your taxes? I'm kind of in the same boat. I'm self-employed. I write everything off, right? So if you look at my tax returns, it looks like I'm super poor. But I got a really nice bitchin' property and I got a bunch of money in the bank. So how do I get a loan? Okay. So that's the programs that I wanted to talk about today. So the first one I wanted to bring up is our asset only program. And I love this loan. I've been able to help so many people recently purchase a home, even refinance property using this program. So I wanted to get this out there and share this particular program. So here's how it works. Let's say you have a checking account that's got a couple $100,000 in it, and you got a savings account with a couple $100,000 in it, and you got a crypto account with a couple $100,000 in it, and you got a property worth $1 million, but you only owe $500,000. So let's say your asset position, okay, in your crypto, checking, savings, 401k, in your house is $1 million. That's what you would have if you were to liquidate everything. What we do is we add all that up. And then we just divide it over 60 months, so a 5-year period, to come up with an income, okay? Off the top of my head, I don't know what that comes up to. I think it's like $16,000 a month or something like that. Like if you took I don't have my calculator in front of me, but I think if you took $1 million and you divide it over 60 months, I think it's like $16,000 a month. So what we do is we take the assets, we add them all up, and then we divide it over 60 months, again, to come up with what your income would be if you were to liquidate everything and then pay yourself on a monthly basis over the next 5 years. So you would take that $16,000, right, of income and use that for qualifying. No tax returns are needed. All we're looking at is your assets. So all you have to do is supply a bank statement, from your checking, savings, 401k, your crypto account, and a mortgage statement to show what you owe. And then we figure out what the value of your property is, and boom, that's it. Super easy, breezy. And by the way, the interest rates on this program are in the low 6% range. So we're seeing on this particular program that rates are anywhere from 1/4 to 0.5% higher than a conventional loan. So it's really affordable, and it's an alternative way to get the financing you need if you write everything off on your tax returns. Another program that I absolutely love, and I've been doing a lot of, I'm sorry about the sun, is our 1099 program. So this is for self-employed people. If you're self-employed, everybody knows you get a 1099 tax stub. It's kind of like a W-2, but it's what we call a 1099. It's when you're self-employed, this is what you get, okay, from all the jobs that you do. So what we do is we look at that 1099. Let's say the 1099 is $100,000, okay? We can use 90% of that $100,000 for qualifying. No tax return needed. You just supply the 1099 stub saying, hey, this is what I made in 2025. Again, let's say it's $100,000. We take 90% of that, so $90,000, and that's your income for qualifying. Again, no tax return needed whatsoever, okay? So again, if you're self-employed and you write everything off, this is a way to skirt that, okay? Just supply your 1099, and that's it. Another program that we have that I love, this kind of goes in connection with the 1099 program, is a CPA letter program, where all you have to do is have your CPA write a letter saying who you are, who they are. They have to be a licensed CPA, okay? So they write this letter and they just say, you know, I, John Smith, am writing this letter to verify that Susie Jones has filed her tax returns for the last couple of years. This is her job, this is her position, this is what she makes, and that's it. Okay? So, no tax return, no 1099. It's just the CPA writing the letter stating how much you've made and what your position is, what you do for a living. Okay? And that's it. And we just need to make sure that that CPA has actually done your taxes for the last 2 years. Now, we are going to check to make sure that you have filed taxes. Okay? You have to have filed them because we don't want the IRS coming back at us and placing a lien on the property. But we don't look at the income. We just check to make sure that they were filed, and that's it. And we don't look at anything on the tax return. So this is another great program, especially for people who are self-employed. A lot of the programs that I'm talking about today are for borrowers who are self-employed and have an issue qualifying. Because again, when you're self-employed, we have a lot of deductions, right? We write everything off. Nobody likes paying taxes, right? So these programs, alternative financing options, are out there to help you qualify. Another program that we have, and this is for basically anybody. Let's say you want to buy a second home, an investment property, fix and flip, whatever the case may be. And you don't want to go through the rigmarole of supplying pay stubs and tax returns. Same scenario. If you're buying a fix and flip property or an investment property, we have this program called the DSCR. Which stands for Debt Service Coverage Ratio. And all we look at is what that property will generate in income, rental income. And we use that amount for qualifying. So again, no pay stubs, no tax returns, none of that, no CPA letter. We're solely focused on the income that that property will generate. And then we use that income for qualifying, okay? And kind of a little neat, nifty thing about this is the mortgage payment can never exceed what the income it generates. So if a property is generating $7,000 worth of income, the mortgage can't exceed $7,000. Yeah, $7,000, yeah, correct. That's a huge mortgage, by the way, okay? So we can do this on 1 to 4 units. We also have a 5 to 10 unit. 5 to 10 units is considered commercial. So we have a specialty program for that where we can do 5 to 10 unit properties on the commercial side. And again, we only are looking at what the income that property is generating, and we use that income for qualifying, whether the property is rented or not. If it's rented, we look at the lease agreement and then we do a market rent analysis through the appraisal. If it's not rented, we just do the market rent analysis through the appraisal, and the appraiser says, hey, these are what the market's rents are, and we use that market rent for qualifying. So we have some really creative programs out there. Another one, I've done a lot of these this year, is the bridge loan financing, where somebody owns a property. Now this is really popular, especially right now where people own property and they're trying to buy another one, right? And they're like, well, how the hell am I going to qualify carrying this mortgage and qualify carrying the other mortgage? So what we do is we have a specialty program with a couple investors where you can even pull cash out of your property if you want to use for the down payment. So they'll let you access the equity in your home, pull the cash out, then finance you to go buy your new primary residence, and they will not count in the departing residence because they know you're going to sell it, okay? And you do have to sell the property within 6 months of getting the financing. So they do want to make sure that you are selling your departing residence, but they will not count your departing residence debts against you. So taxes, insurance, HOA, mortgage payment of the departing residence, they don't factor that in at all. They'll get you the cash that you need out of that property and finance you and qualify you just on the new property that you're buying and not count the other one. And that's a really great program because, again, it alleviates the headache of, like, how do I qualify carrying both mortgages, okay? We just have to make sure that we're using the same lender to pull the cash out as we're using to buy. Okay, so we have that option as well. So we can utilize assets, we can utilize market rents for qualifying, we can utilize a CPA letter, 1099 tax stub, and that are just some of the programs that we have. We also have private financing where they don't look at anything, right? They're like, it's not hard money, right? So it's not double-digit interest rate with 3 to 5 points. This is kind of between alternative and hard money. We call it private money. And interest rates on this are between 8 and 9%, but they don't look at anything except what you have for the down payment and closing cost. You need to put 25% or more down, and you need to make sure that you have at least 12 months of reserves. It's a short-term financing program, so it's basically just to get you in so you can fix whatever issues you might have with, your taxes, so you can obtain, traditional financing down the road. But we do have private money can be used for a primary residence, a second home, or an investment property. And again, we don't look at anything except one bank statement to show that you have enough money for the 25% down payment and you have 12 months in reserves, and that's it. So this is perfect for people who do not want to mess around with gathering all the paperwork, or people that have issues with their paperwork and just need short-term financing to get in, or fix and flip investors, right? They know that they're going to turn and burn a property within 3, 6, maybe 9 months at the longest. So they can get in, basically no documentation, just have to prove that where the money's coming from, and that's it. So a lot of specialty programs out there. Another one wanted to mention, now it's not a program, it's about a loan term. We've all heard about the 50-year mortgage. I don't know if that's ever going to come about or not, but what has been around for quite some time is the 40-year mortgage. And that is a program that we have. Quite a few people, especially in today's market where home affordability is, it's tough, right? Interest rates have been moving down, but still, it's difficult to qualify for a mortgage at, these elevated interest rates. So you can utilize a 40-year loan program to help qualify for more money. So basically the 40-year just extends the loan term out to 40 years, has a lower monthly payment. We also have the interest-only programs too, that you can qualify on, where you're just qualifying based off of making the interest payment. I don't really suggest that program unless you're an investor. I've seen too many people use that program on a primary residence, and then they just get stuck in the loop of just paying the interest-only payment. Nothing ever goes to principal, and then 2-3 years down the road, they still owe the exact same amount they did when they bought it. So I really try to educate my clients that interest only should really only be used for short-term financing, fix and flip investors, people who understand it and are going to get in and out of the loan fairly quickly. But again, the point of the video is that we have access to all these programs. Besides just the standard FHA, VA, and conventional and jumbo stuff, I have a ton of alternative financing programs. So if you're ever considering buying, or you need to refinance, pull cash out or whatever, and you're like, oh, I'm not going to qualify because, I haven't done my tax returns, or I filed, my tax returns, I wrote everything off, and my income looks like I'm practically poor. Give me a call. I can help you, again, because I have access to all this stuff. So I just kind of wanted to share that. And then, that's basically it. It's been a while since I've been on Facebook, and I thought today, with it being St. Patty's Day, I'd get out and do a little video. That didn't really sound so Irish, but whatever. I'm here for you guys. If you ever need anything, please don't hesitate to reach out, and stay safe today. If you plan on pounding a bunch of green beer, call a frickin' Uber. Don't be dumb and drink and drive, right? Go party it up with your family, go party it up with your friends, but just be smart about it. Uber home, take a cab, have a friend come pick you up. Take care, everybody. Bye.